Well, it had to happen sometime. Most of Canada's real estate market is in the midst of a cool down, but competition among the country's biggest lenders is heating up. Fixed mortgage rates are on the rise. The interest attached to that type of mortgage is linked in part to the Canadian 5-year bond yields, which hit a 7-year high today, based on the market forces of supply and demand. But variable rate mortgages are going the other way. TD Bank is trying to bring more home buyers through its doors by offering a steeply discounted variable mortgage rate. It dropped its 5-year variable closed rate for May to 2.45% for new mortgages and for renewals. That's 1.15% lower than its prime rate and mirrors the Bank of Montreal's variable rate discount the week before. Here's the likely reason lenders are clamoring for your business. A lot fewer homes are changing hands, so there are fewer potential customers to go around. In April, sales fell nearly 14% compared to last year. That's the worst showing during the period since 2011. That's significant because spring is typically a busy season for home sales. The average price of a home fell by more than 11%. That Canadian 5-year bond yield we mentioned off the top also determines who qualifies for a mortgage and for how much. The Canadian Real Estate Association says those stress tests continue to cast its shadow over sales activity in April. To discuss what's going on here, we're joined by Cynthia Holmes. She's Associate Professor and Chair of the Real Estate Management Department at Ryerson University's Ted Rogers School of Business Management. It's nice to see you. When you look at these numbers, what do you see?
I see that the sales activity volume is really low, historically low. So this is one of the lowest, the quietest months we've seen, a quietest April for years and years, since 2009.
And what do you, I mean, obviously there's been policy implications, there's that stress test we talked about. What is it that's driving that not only lack of sales activity, but then people driving prices down as well?
I do think the mortgage stress test is having an impact. So starting in January 1st, a larger set of borrowers found it more difficult to qualify for mortgages, or they would qualify for smaller mortgages because of these new rules.
I'm going to read this because I want to make sure I get it right, because there's so much jargon to this. The average price of a home fell by 11%. That's compared to 2017.
Yes.
How much of that reflects the actual home-to-home comparison, and how much of it reflects, well, people were buying different kinds of homes, smaller homes, whatever it may have been?
I think it's important to recognize that smaller homes are transacting now, partly because of the mortgage stress test. So all of us, when we go in to qualify with a bank, now that the stress test reduces the amount we can borrow, we have to turn to smaller homes like condominiums or townhouses because we can't qualify for such a big mortgage. So as we shift into these smaller units and we transact those smaller units, the average sale price, the average transacted price goes down because we're looking at smaller houses.
But do you get the sense then that homes are worth less now than they were a year ago, or I could think more importantly in the last sort of 3 months or so? Or have we begun to see those tick back up a little bit?
We are seeing them tick back up. So if we look at the housing price indices that are published by CREA and other sources, what we see is actually in the last 3 months, both Vancouver and Toronto have been up by about 3% over 3 months. So the sharp declines we saw in Toronto have sort of resolved themselves by Christmas time, and then we started to see 2018 slowly chugging up again. And so Toronto and Vancouver drive these broad Canadian statistics, and so that's why we turn our attention to those two big cities.
It sounds like such a shocking number, the 14%, this huge drop-off in sales volumes, and yet we need to put it in the perspective of the year before, all of those had been up double digits. I think sales prices in Toronto were up 33% in 2017. So this had a lot of room to give back some, didn't it?
Exactly. It was bananas last year. So this year, it's a much more calm market. It's still really low, like lower than I would expect. It's pretty low. But if we compare it against the previous year, we would have expected it to be lower anyway. But this is quite a low volume.
What's your take on the switch we've seen now in mortgage rates? I find fascinating because we all know the fixed rate is going up because the interest rate environment is going up around the block. But then you think about it, all these banks with fewer people out there exchanging homes, they're now fighting for consumers and customers. Are those variable rate mortgages a dip, or will we see competition push those or keep those flat for a little while?
Well, you know, a bank can choose strategically to compete on fixed or variable. And they're choosing to compete on variable more heavily heavy. And you know, when you or I take a variable rate mortgage, we're assuming the interest rate risk. That means that we're prepared to ride up. If I take variable rate mortgage,
we go up
if it goes up, I go up. So if I'm prepared to take that risk, and this is an environment where we might very well expect interest rates to go up, then the bank is compensating us for us, and the bank is interested in transferring these kind of mortgages to us.
Overall, when you look at these numbers, the mortgage, like all of these little data points that are giving us different pieces of information,
yes,
are we healthier today than we were 6 months or a year ago?
Yes, because last year it was a crazy situation in terms of perhaps speculation or something was happening in the Toronto market that was out of hand. And that has rolled back and we seem a lot calmer. Now, prices are still high and remain high, and that's unfortunate for especially first-time home buyers and young people. So that's unfortunate. But I think it's a more balanced market than we've seen before.
But like if the politicians were hoping that these policy levers were going to straighten out some of that wonkiness and bananas part of the market, it cooled it, but it didn't last very long. Did it work?
It cooled it. It didn't last very long. They came back, and there's unfortunate impacts in other cities.
Right.
So Vancouver and Toronto are one story. They were overheated. But Montreal and Ottawa are nice, sensible Goldilocks. They're just right. Not too hot, not too cold, chugging along. And now some of these national level policies affect them as well. So that's sort of the problem with these national level policies.
Good points as always. Cynthia, great to see you. Thanks for this.
Thank you.
Cynthia Holmes, Associate Professor and Chair of the Real Estate Management Department at Ryerson University.